can say, oh, over 200 million. If you don't remember, maybe it is 203 or 290 something, just say over 200.
I think a lot of Sterling Bank people are supporting Peter Obi.
It's not just Sterling.
You don't know what. Did you see that church? That church
why I said
why would I see?
Did you see that church video yesterday?
And I've been voting for Tinubu. Let's even drop vote. I can't even be talking. As we are talking, can I be boasting about Tinubu?
What do you want to say?
The money that came online, it was saying,
what do you want?
Agbado God, you don't even know what he was even saying himself.
God, is that the one that will go to economic summit and be talking? Is that
no, truly. If you make it go G20 summit, make it go talk for that place, they'll say, we see this one.
Funny enough, they will not talk.
They made a very big mistake by dropping Ochibajo.
If to say now Osinbajo come out, I could just say yes, say that man.
That should have been a candidate.
But for Tinubu, he say no, please.
So the thing is, they won't allow Osinbajo to get there.
That is one thing.
So
they won't allow him.
And me, I am so passionate about, because I for me really living in this country is not really my thing. It's just now that I'm thinking about it. So when I see intellectuals. It's one of me and Arsenal, we fought in 2019 on Facebook. He's a diehard APC.
Yeah.
I mean, I told him that I know why you are supporting APC.
Why? Where is the legal shot?
It's a personal thing, so I will not even want to talk about. But I told him I know why you are supporting APC. So you now come online and expect everybody to fall in line. No.
I see. Okay, so
it's kind of
wait, Naim that way. Okay.
It's the bosses that it takes and it takes.
Yes, now.
No, who does? He's lost.
The guy is old. How can somebody who is claiming to be 70? You are 86. You are getting.
Oh yeah. Let's come back home so that we can. This 4 o'clock already. Okay, so getting the CPI data. So what you want to do really in your input sheet is for you to be able to look at what is the CPI rate in a year, let's say December 2016, or before your forecast. You can also have it a year before your forecast year, so say 2021, so you have it here. So instead of you having it from 2017 up to 2021, you can as well have only one here in 2021, and then
because that's what is relevant to your forecast.
So have one in 2021, then project that going forward. Looking at, so the reason why you might want to pick for 2017 to 2021 is for you to see how has it been increasing. So that increase is what you are going to also propel into 2022 to 2026. I hope that is clear. So, and consumer price index. And the way consumer price index work is that you need to have a base year figure. So let's say it's 477. Let's say it's 477. If I know it has been growing at let's say 1% or 2%, so it means this is going to be 479. So, and I'm going to take that forward, that this plus 2, that will be the rate going forward. So this is the CPI that I have projected. If I know the growth rate on the CPI is 2% from the past years. But I always want to look at 5 years of, immediate past. But some analysts want to take a 10 years because they are looking at the larger the figure, the larger they'll be able to get the average of those 10 years and say, okay, if going forward, this thing should be, it should average out. You know, the more the number of years that, but in the case of Nigeria, it's not. So
Everything goes wrong.
so that's why I always want to look at even the immediate year. I just have a look of how it has been growing the past 5 years, and I prepare that going forward. So if it has been doing 2%, then we do it forward. So, but consumer price index is a monthly thing. It comes monthly, so it's even better for you to do a monthly just for 2021. Monthly in 2021, how has it been growing in that year? Then find the average of that year. So that is the consumer price index that you are going to give here.
So if I want to show the monthly, where will I put it?
Yeah.
If I want to show the monthly, where would I put it?
So just like I said, if your time ruler is not the same thing as this, then you would need to create a primary, a secondary time ruler. You know, we talked about that when we were talking about. So you have to create a secondary time ruler.
Not under timeline, still under it.
No, still under inputs. So you are going to give it a secondary time ruler. So it's going to be, let's say, which month are we now? Let's say January 2021. Then if we use your month, that would be this and one, right? So let's print this as and this. So I can put this forward. So you have it up to here. So what I also advise is that if you have a secondary time ruler, if it is like this, it is confusing and it's distracting as well.
Yeah.
People, you won't be able to carry people along that storyline.
Exactly.
So what I always advise is create a new sheet that is different from your time ruler and let that then be monthly. You understand? So this is what I mean. Like this, I duplicate this and I make this a monthly thing. It is separate. It's a standalone thing, separate from my model. I'm only using an input from it to do my analysis.
Can I call this second one timeline 2?
No, secondary time ruler.
Okay.
So it's okay. You mean the sheet name? Yes, you can call it. No, don't call it that. Just call it CPI. Yeah.
Okay.
So that means the CPI is based on the period CPI you have, which you then analyze, then fed it into inputs. So it's fine that way. So how about me able to explain that? But you see the details in the video. Okay, so we also went to the website of Nigerian Bureau of Statistics. So if you download that, I think I did. Did I download? No, I didn't. So if you open that, you will see it here. You see there. So they are for different. So they have a lot of things on their sheet. Let me start from table 1. So combine urban and rural state consumer price index. So these are individual food. So if you are modeling for a startup, for instance, and the startup is going to restaurants, you are going to be using this CPI, not the all.
Okay.
So the all is what we can use for a Nestle, you know, or we can bring a Nestle down to food, because they're actually into food and beverage. So a Nestle fits you using a food consumer price index. But if you are modeling for an IT company, for instance, you are going to be using all. You're going to be using all. So a Nestle fits this, you know, and they have given this for each of the states, and so let's say this second one. Oh, so they've done a 12-month average as well from 2009. No, is this okay? This is 2009 to. Okay, so you can see that from 2009 they have, I think, up to 2021. Good. So up to 2021, this is what they have. So for food, we are concentrating on this, you know, on this. But what I always advise is just to take the all. That's what I advise.
I wanted to say that can't you just, I mean, just say all.
So I always advise the all, which is this, all items. So from January to this, where is so we have up to September here. So meaning their data stopping. No, we've got current ones as well. Let's check the other ones. We should have 2021. I mean 2022 should also be out. The same thing here.
Nigeria.
So let's see.
And they have updated this thing.
No, they do update it. Maybe they've not updated this far. They just update it on site.
Since the former DG left, that place has.
Yeah, we can. The day I met that man, very calm and level-headed. So yeah, we can.
So this one is posted. So this one is not broken down. So that's why this one may not be useful. Let me see this. Nothing is there. Okay. So all item. Okay. So they've given us for all item year-on-year change is 16.6%. So you can see so they've done the analysis here, you know. So and for our own reports, you might want to use year-on-year. So they also did a 12-month average here, which is close to this 16.8. So this is the change that will be actually, I mean, that they have projected that will be seen, they will be seen every 12 months, and every year is 16.6. So what they did here is that they analyzed monthly data and they averaged the 12 months. That's what they got 16.8. And here they used yearly data and they did the average, and so they're having 16.6. So you can see that that has been growing by 16.6, unlike the 2% that I had
Year on year,
16.6. Yeah, year on year 16.6. So that's the data that is collected from Nigerian Bureau of Statistics. And if you go to other websites, I think I saw something on their website. Okay, consumer price index 16.63% year on year. So they've actually stated in their website that it's up to September, and lower than the rate recorded in August, blah blah blah, and so they've actually stated this, But then if you go to other websites, you will see that they have the consumer price index on a year-on-year basis. But because we are in Nigeria, data from NBS is a trusted source, and that's why you should actually confine yourself with this. So except if you are going to be getting your data from international body, which they would have linked to NBS or central bank. So central bank also get NBS data and present it on their website. I don't know, I should see an option for central bank. So this is also a popular website that produce economic data in all, I mean, in
trading economics.
yeah, trading economics.
They are so lovely.
Yeah, but we should also see CBN. I don't know why we are not seeing CBN. So CBN also link to NBS to get that. Okay, so that's for CPI. But guess what? If the consumer price index on the price of all goods in Nigeria is at 477 and it has increased by 16%, it increased by 16%. Okay, so let's say we have 479. It is that increase that we want to measure, which is that 16%. And what we are going to be adding it on the cost of price now that we are modeling. So let's assume our cost of material is 200 or 2,000 in 2021. How much will it be in 2022? This is how it's going to be. This is your current CPI. You are going to divide it with a base CPI. Then multiply by the cost of the goods. And so you see that there's an inflation on the price of the goods. So this is how inflation is embedded into your model by using the CPI and the forecasted CPI. So the base CPI, the historical CPI is your base. It's your base. So your base will be the denominator, while your current CPI will be the numerator, so that the increase can actually come on the value of the goods. Then you can project this forward.
This is probably what you do in power sector.
So you see it. So you see this. You see it growing by the consumer price index. You know. So you are building increase in price forward. Now, let's say your model, they are using your model for implementation, and they got to 2022, and they saw that the projected index has changed. So they can come to your model and just change, oh, it's now 485, and it updates. So your model is flexible enough to be to go along with the implementation and show them what the aftermath result is going to be. Yeah. So
God bless you. Okay.
Amen. Let me quickly say amen. I don't know the angel that is passing.
CPI, of course, has factored in inflation, exchange rate.
Yeah, other stuff. Yeah. So that's that. Then you come to income statement assumption.
But we're not doing it. You are the one that will do it.
Yeah, I will do it. I will do everything and prepare it. So I'm explaining it so that you get your understanding. When you then listen to the video, you then understand it better. So how do we ensure that we capture all assumptions for every line item in our statement? This is how we do it. We'll go to our income statement.
John, the first one, the second one.
How will you wanna? Do I have to? Income statement. No.
It's this one that we're going to work with. The one that you're
Yeah, the one that. So you copy all this. You copy all the line item like this. And let me copy it up to this. Control C. Then you go to your inputs and you right click and paste them. All these items needs to be given an assumption. So except gross profit is determined with a formula, right? So, but let me explain this. There are times that you will not have cost of sales, but they will give you the gross margin and tell you the gross margin is in our industry. Like I know for telecoms, because I work in telecoms a lot of time and I did a lot of analysis then. So I know that in telecoms their gross profit is between 54% and 60%. You know? So if you don't have cost of sales and I want to get gross profit and they've told me that it is 54% my gross margin, for me to get my gross profit, I will just multiply that gross margin with the revenue that I have, and I'll be able to get this figure out. Okay. So be mindful that for established companies, yes, you have all that you want in the line statements.
Bottom up.
Yeah. So, but if you are doing your bottom up, you may not have information regarding cost of sales, but they have been able to project their revenue. But like for telecoms, you can get data from NCC regarding telecoms industry, Nigeria Communication Commission, you know. So you can get data for telecoms in that, on their sites, you know, and if you apply that, the margin on the revenue, you are on your way, you are moving on. You are not bothering with, you can determine your cost of sales. You are not bothering asking them, what is your cost? You understand? Except if you then want to break down the cost of sales into some
Exactly.
composition, that's when then begin to bring technical asking them to actually give you technical information.
They tell me revenue, they tell me gross margin. It's just like I'm doing what they've told me. There's nothing added to my model. I would love to want to break down the cost of sales. You know, the model will be to have flesh.
Yeah. So, except if you want to, so there, when you are building a model, the first time the client might say, just give us an overview. Let's see an overview first. So at that time, you won't be bothering yourself with details. They just want to see, okay, this thing we have in our head, let's see it on ground. What is it going to amount to? So at that point, you can do this. What I just explained, where you use a gross margin that is in operation in that industry. Yeah, and quickly get those data out, and they see, oh yeah, so okay. Then from there, they can then begin to ask questions about, okay, so in this business you are going into, what will be your likely costs? You know, oh, we are going to buy this, we are going to buy a radio, we are going to build masts and all of that. So we then begin to say, okay, so what does it cost to build a mast? Material, labor, and overheads. So they begin to earmark them to you. In fact, those engineers, they know how to do that a lot, you know. They quantify every item, you know, even to the labor. And so we need 5 men to man this thing, and then we pay this per month, you know. So they give you those breakdowns, you build it into your model, and so it's always for startups.
Sorry, when they now need other people, like a power model now, when they need other people like quantity surveyors as well, they are not quantity surveyors. Am I the one that will go and be looking for quantity surveyors?
No. They are the ones. So you are going to request for the information, and they will know that, oh, this is the person that can give me. So let's engage this person. In fact, for some startups, if they actually have money, what they do is they do a business plan,
Yeah.
a feasibility study, a detailed business plan. So in that business plan, they would have engaged all the technical guys that they will give them the breakdown of everything, you know. So it is that business plan you need.
Yeah, I thought it was
As a
normal
modeler.
to always ask for business plan.
Yeah, normal.
So there are some clients that will not give business plan.
Of course,
Yes,
there are some clients that will not want to.
startups get levels now.
There are levels. There are
Well,
some that doesn't have money.
They are
Well, I'll work on it for them. Give me money for that one.
Except, yeah, so you can also tell them that you can do. In fact, they always want, but the thing about it is, they want to give you the price of 1 for 2.
Yeah.
If you say you are the same person that are going to do the business plan, you know. So, and that's why I don't bug my head with it. Go and figure it out and just let me have it and let me do my job and move. So, because if you say, oh, you can as well do business plan, then you say, okay, so right on, it means the money is this. Then at the end of the day, you find out that you are paying only your money. They will tell you it's part of it. So, like he said, startups have levels. There are some that it might even be friends and family. Some startups, you know. Why some will be friends that are no friends, connected them to you, you know, and they just want to start something up. Why there are some that they have the money, they are just looking for people,
Investment opportunity.
yeah, you know, to help them, bet the idea,
Actualize,
should show them that this thing is possible.
But
So
I mean, the contract can clearly state that business plan, so amount, financial.
there are some clients
model.
that they will not want
Sign.
you to sign any contract. That's why I said there are levels. So it then depends on your own professionalism and say, look, this is our process. So even when you say this is our process and you send them, they won't reply anything.
Depends on
You
your
know,
the level at which you are operating.
you're operating.
If you are
So
desperate for a job and they have brought something to you, you are not asking for this, asking for that, they will take it elsewhere. But if you
yeah,
are not desperate and they need you, then you can ask for non-disclosure agreement first. Go and sign that one. You bring contract. They will do everything because it's you they want. Yeah, maybe the big four. But if you are not, they will take it elsewhere now. So
Yeah.
you just
So it
you
all
just
depends.
Jump on.
So it depends on the person, the client you are relating to. Really, depends on them.
Because me, I hate stories that talk. I hate all those kind of stories.
But in Nigeria, there are stories. There are a lot of stories in Nigeria, and that's why you just you need to stand your ground as a professional. That look, this is my process. But I can bend. It's not as if I'm stereotyped. You know, just tell me what your challenge, any challenge you mean. Just let me know immediately, then we can take it up from there. You know? So that's
Now start telling me your bank something happened, you have to pay for something. No, you are in this, you are almost like a partner with us. I'm not a partner. Pay my money.
a friend has introduced a company to me. They want me to do a valuation report of is this 6 or 5 companies? You know. So what I did is I billed them for 1, so per 1. And now I said use your thumb to count your teeth, you know. So but they came back and said, look, let's negotiate it together. So at the end of the day, they are negotiating it at the price of 1, 6.
No.
And they are saying, the angle they are coming from is it not the same process you use for one that you use for the others? So you can see.
Come on, do it now.
So it depends on the clients really. Client differs.
I even hate clients that make you feel like, what are you doing? That they think they know your job.
No, it's not as if they don't appreciate. They appreciate.
But they're saying it's the same thing. How is it the same thing?
So their view is you are virtually going to use the same template. You are going to use the same formula, It is just the figure and the name of the company
Yes,
that will change. Not knowing you as a modeler will have to, if the other companies are in different sectors,
Yeah.
you have to go search for data that fits them.
The line
You know?
items will not even be the same.
It will not be the same.
Several things
you
are
know?
already changing.
You know?
They don't know those ones.
So they would not know all those ones. They will, so they will come from
I
that.
think it also boils down to what they have heard about you before bringing the job to you in the first place.
If you are someone that bends the law.
So no, it's not even that. If the person who referred you as
No, the person too do not know. In fact, immediately they told the guy works in one of the big four. So when they told the guy said, okay, we can't take it because it's too small. But we have someone that we can refer you to. So that's when he referred them to me and he answered off. So I was the one giving him feedback. In fact, he told me, he said, Baba, just back them. It means they are not serious, you know. So, and that was how because I can't sweat for 6.
Yeah.
That would be like walking like Jackie now, you know. So,
well, the point I'm driving at is some guys will take it.
Some guys will take it, definitely.
Because so it's your level, depends on the level of, the organization that you yourself are running. If you are desperate to just get something, you will take anything.
No.
So all those contracts and they will say no, we are not signing anything. Okay, shall bring it.
Yeah.
But if you are already established, there are some things you will say no, this is my position. And that's it. So that's it.
So it depends on your own process, what you feel you can take and what you feel you can't take. So
Then can you charge people like with like retainership, like they are like engagement fee? Can you charge people engagement?
yes, now you
You
can.
charge people?
Yeah, you
Because
can.
I can't work and
You can.
then you're not telling me sorry,
So-
just hold on, we'll pay you. So at least let me have collected something from the engagement.
Absolutely.
Yeah, you can. You
I
can
am
charge
sure,
them based on
I am sure our guy must have experienced some things like that. And in dealing with another client, he will not make those mistakes.
No.
Of course.
I'm
So
sure some people have given you stories that touch.
Of course,
experience is the best teacher. So experience will teach you what to do.
You move from your experience.
Yes.
Okay, this one, this
Yeah.
one. So next, the one coming next,
So that's the way it works, you know. That's the way it works. But if you are just coming in, you definitely learn that experience by
by force.
Nobody will teach you.
Especially when you are still desperate to get a job.
Yeah,
You
yeah.
say they are not paying it, go and do it first, and you will jump at it.
Yeah, you will quickly jump at it.
You want
You'll
to
be like,
impress them.
you know. And that's why, yes, I can do it with, a tingle of an eye, but I won't give you that impression that I can do it now. You know, and that's the case of that the other man that came here the other time. So he knows my capability. He knows that it's something I can do quickly, and but I won't give you that impression. You know, he knows me better, but the other person who wants the job doesn't know. You know, 2 weeks ago. No, it should have been like 3 weeks ago. That he brought a model to me, the same man. He said, look, hey, I'm going to pay you something on this. Just help me to balance this model. That he did it for a company it's still in the what do you call it? Vessel thing that he did the model for, and so the model did not balance. And he said he has given it to several consultants and they couldn't balance it. So when he brought it to me, I said, okay, I can do it. You know that I can do it. I said, so pay the money. And the guy was dilly-dallying, and I didn't touch it. I didn't even open it. And the guy was texting me, chatting me. I said, have you made any commitment? So I said, should I leave those that have paid and face this one? So that's what I told him. So he understood and said, but But you know we are friends. I will be friends, but
I know you do friends for business.
Our friendship go put food on my
Put food
table.
on the table. But this
So-
country, if you say go meet one man like this, they give post to you anyhow.
Oh.
Say,
So and because we are friends, I said okay, because he knows my family, he knows my wife. Most of the time I will come and you say, look, I'll report it to madam. So and I felt no, this man should not be, I shouldn't be allowing him to do all that. And I said, okay, let me do this. Let me do it for him. So the day I sent it to him, and no, I even went there. I said, let me visit you. It's been a long time. So I went there. I put the model in a flash. So he asked me when we got there after exchanging, he said, how far my model have you balanced? I said, of course, this is it. So where is the money? He said, okay, you balance it. I said, it is here now, check. So he put it in his laptop and he checked. And he said, hey? Then he said, okay, you balance it. I said, what? I said, I have given it to people who did MBA in Harvard.
Now by that one.
That did it.
even mentioning MBA in Harvard, you expect
said,
the person
hey.
to-
I said, but that's it, you are looking in your front. So I said,
Sharp pay me my money.
so
Cool.
the man was astonished. He knew me, he knew what I can do, but he was surprised that particular model
Maybe
can balance.
probably because they are giving it to some other consultants.
Eh.
So he was skeptical. If I pay this guy and he's not able to balance it in court.
That's happened now.
All the money that he has given those people.
But that balancing, the way you have said it now, it's going to be a major work. Like somebody had done something, then you are supposed to balance it.
As
It's going to be crazy.
someone's work. It's going
If-
to be very annoying.
It's like
So-
going through it one again. all over
Exactly.
again.
It's like giving
So,
it all over.
Thank you, that's the word. That's the word. So what I did was, he got majority of the things right, but he didn't get working capital right. He missed it in working capital. So what he did was, he did receivables, but he didn't calculate it very well. In fact, one fundamental error he did is that he did a direct method of cash flow. So cash collections from debtors was what it took to receivable in the balance sheet.
Cash collection.
So-
No, that is cash. Now
So
it means that
that's-
there won't be any receivable there.
So, cash collections, cash paid to suppliers, he added it up and took it to working capital. Cash collection, receivable, he put it in, from debtors, he put it in receivable. Cash collection, cash paid to suppliers, he put it as suppliers.
So payables and receivables.
And receivable was the error he made. And so what I did to review it is to look at his assumption, I look at his calculation, I look at the linking. It did link to the right thing. So I was doing control open square bracket F5. You know, that was what I was doing to review it. So after seeing that where it's connecting to, and I looked at this, okay, I went to the balance sheet. Balance sheet, where are you connecting to? Some connected to calculation, some connected to the input. So I look at where the receivable was connecting to in the calculation. I saw that it is cash collections from debtors. So what I did was to say, okay, revenue, amount cash collected from that revenue that was made, the balance is receivable. So I took that. That was what I took there. You know, and I did the same for suppliers. And so when I did that, I found out that everything balanced.
And the guy would have suffered. He would have wanted to kill himself trying to balance.
Exactly.
For him to have given up.
Some even give up. That's the
And
Even that receivables, the way some people interpret it alone itself, it's quite from the way you conventional way of receivables.
Yeah.
Cash collection, what is now receivable there? when something is receivable, it means it's yet to be received.
You
Cash
know?
is yet to be received.
That's it's a fundamental error.
Very fundamental error, and that's what I.
Perhaps maybe he's under pressure and he's just moving,
No, some
you know,
people
trying
just don't
to.
have that this thing. You know that it's not everybody
No.
that's an accountant that is.
You need to have eye for details and also that understanding.
Exactly.
Some people are accountant, but they don't have that notion that that's what should go to receivables.
Mm-hmm.
Are you
Man,
serious?
I've met accountant. I've met
Some people are not even
accountants.
accountants and they are building this thing. So
Yeah, some people are
probably
not.
will see receivable and say,
Actually,
that's what I have received.
Yes.
One thing I keep saying is when you see the number of people that graduate from accounting every year, you will know that there will definitely be some people that will not know. It's just the
That is
truth.
just it.
It's just a lot of accounting classes are large.
You just see
It's just like law.
and classify as something I have received.
Some lawyers will
But there's
not
one
know.
thing.
Payables.
There's one thing they do in this
something I
country that I don't like.
Lawyers,
Some
lawyers,
people- there are some people
lawyers
that-
don't know anything.
Yes, now.
There are too much. There are too many.
No, when you are in a university or let's say polytechnic, when you are supposed to have a capacity of like 200, and you are receiving
Yeah.
60,000,
Ah.
6,000. You know that one is more money to them, but at the detriment of the students. Because
Yeah.
some students they just come to school. I've seen some people that will come, they will be at the back of the class.
Yeah. Bro, I can remember
They'll be
my
at the back
year
of the
one
class.
days. I
They'll
don't used to
be
go
doing
to
the same.
class because when I went to my first class, I saw it was
Sure.
it was general. All those year one I was general class. Some people were sitting down on the floor. Which kind of passion is this one? Going to class by 4 a.m., 5 a.m. to class. Come on, just go back and be gisting with senior colleagues.
And again,
This is not how to do it.
Sir, and again, he's a lecturer too. If you look at a lecturer, there are some lecturers that will come to the class and be doing debit, credit. You will not understand.
Yeah.
Like for me,
You have to-
like for me,
Most lecturers, especially public
Oh,
universities
no,
like
no, no,
that,
no, no, no,
it's
no.
your own individual.
they will just be
That's
doing
why
it
I
very
don't
fast.
go
They will
for
just be doing it very fast and they won't understand it.
Yeah.
So like me, what I used to do is that maybe like if I'm on holiday, I will go and read about that topic very well.
It's not
When
even
I go
just
to
holiday.
class.
After each class, you need to research that thing. on your own.
Yeah.
Bring
So
out
that you
books.
don't forget.
So anytime the man comes to class and be saying debit credit, I understand what he's doing. So is the student to have their own work to do, and the teachers to have their own work to do too. So when you are employing,
That's
okay,
why-
a class that's supposed to be 300, and you are employing 60,000 students, so you will see some will be flocking outside, some will be in the window.
Some people will
Our
not even
learning
come.
environment
Will not come to class.
is why we excel outside Nigeria. Because
Very tough.
if you are a serious student in Nigeria,
Toxic.
I'm just trying to think the kind of school you go that you not excel.
That is just his brother.
If you are a serious student in Nigeria, because my 100 level is just like you said, by the time you get to class, there are places you have to hang out from outside the window.
Bros,
Yeah, outside the window.
One
you
of,
don't
the,
even-
one of my fears now is that I went to the polytechnic. Are you getting? And because I did not get admission into university on time, so the admission for polytechnic came. I rushed because I've stayed like 7 years at home.
Wow.
Okay.
Are you getting what I'm saying? So when I got to that point, I got to ND and my ND result was superb. They were now telling I think it was late. I went back for HND with the estate surveyor was asking, saying, but partner has a link in Unilag. You should have asked him. With this kind of result, you should have. I said, no, let me just finish.
Okay.
Now, when I finish now, it's now becoming, since that time, it's now becoming so difficult for me to go into this. So when I see they'll say you must have bachelor's degree in this, those things will discourage me from applying.
Yeah.
Are you getting what I'm saying? So even recently, I told you SIO, the friend to this Jessica,
Yeah.
the manager, the audit manager called me. He said, what do you have? I said, I'm planning to do MBA, but I don't have BSc. He said, what of BSc? I said, I don't have. He didn't get back to me today.
And
Yes.
that discrimination is there.
That discrimination.
Yeah.
There are some people, you see, one thing that if we can stop this discrimination and
Access Bank.
you,
Like Access Bank.
I don't know if they are recruiting, but you know, I'm of age now, I'm of age already. Age too is another factor too.
I think they
Like,
have
no,
also reviewed their
Access Bank has
But it's not.
reviewed it to 35.
They have reviewed
35 and
But
age.
there are some people
I
who
think
are
I
more
saw.
than
I
35.
think I saw something. I saw something like that on LinkedIn.
Yeah.
35 and age and
Because people are living. People are living in their
and
thousands.
what me I tell people is if you can get one solid this thing, then nobody will be asking you about your
They won't ask.
BSc
They won't
again.
ask again.
They won't ask again. I have the access bank this thing.
Oh yeah, let's continue so that I can at least finish up with this. So gross profit goes off, right? EBITDA, these are calculation,
Yeah.
so they go off. EBIT goes off, and net finance goes off. Profit before tax goes off, and profit for the year also, that also go. So these are all the things that we need to actually establish our assumptions on. So I'm going to call these income statements assumptions.
So we're going to do for financial position too.
Yes.
Wow.
So you can see there is a lot. But at a point, it's going to be easy if you have finished this. This is the main thing. If this is done, so let's go and break down our revenue. Let's check our revenue. What is the composition of their revenue? Revenue. So they are using IFRS 15 to recognize revenue here. Revenue from contract with customers. That's IFRS 15. And Nestle is the product that they produce, they sell it through distributors.
Mm-hmm.
They don't sell it directly.
That's why they have contracts.
Yeah, that's why they have contract, thank you, with those distributors. And for companies like that, distributors can return some goods if it is in the contract that they sell, and they say, okay, if you are not able to sell this product after 60 days, you can return it, or return it and get an exchange of the new products. Yeah, I know we used to do it when Samsung released their phones, so when there's a new release of a Samsung phone, I remember when they released S21, the S20, where the price was slashed, and also we were not able to empty our stock with S20, so Samsung said you can return it. They give you the cost of that S20 that you return, they give you back, but that money will not go out. They will use it to give you the new one. So IFRS 15 tackled that kind of scenario. Because if a product, or let's say a part of the product, can be returned, you cannot recognize revenue on it. Even if you recognize revenue on it, you must ensure that you cater for that possibility of return. And that's what brought about, so that I can be putting things in perspective. So if you go to, if you check your balance sheet, and under the current assets, you see something, can you see?
Right of return.
That's what brought about this line. Now, in a normal scenario, when you sell goods, what are the accounting entries that will play out when you sell goods?
Sorry, that right of return shouldn't be a contingent liability.
So, some sorts, yes. Some sorts, yeah. It's similar to something like that. Because when products have warranties, or that, can bring it back if it has not exceeded the warranty period, those things like that, you need to cater for that liability in that warranty.
Yeah, absolutely.
Because the company is liable.
Yeah.
If there's any fault on that gadget
within the warranty period,
the company bears it. So the company needs to cater. Yeah.
Provisions, contingent assets, contingent
But for
liabilities.
this, it's not.
As an asset.
So I'll explain why it's an asset, and that's why I asked the question. If you want to recognize revenue, ordinarily, let's forget about IFRS 15. Like I said, IFRS, they are just expanding what we know.
Exactly.
What we know is still there. So if you sell a product for a next to, it will be more too complex for a manufacturing company. Let's take it for a retail company. You know, let's say a company that buy and sell. Okay, I buy a laptop and I sell it. So when I buy laptops, I buy in bulk, 100 laptops. I put it in my warehouse, right?
Mm-hmm.
I pay the supplier or whatever credit terms we agree, right? So at that point, when I've taken ownership, or what IFRS would call control, you have taken control of that item, it means something should be recognized. So if I'm supposed to pay, normally my cash should be credited, while purchase should be debited when I buy. Or you say, okay, warehouse inventory should be debited, right?
Yes, sir.
For those who run, what do you call it? Inventory, warehouse. They first take it to their warehouse. Then when sales wants to sell, they push it out from the warehouse to the salesperson to release to the customer. I don't know whether you get this. So they'll first put it in their warehouse. So what they do is they debit the inventory and credit cash. It's cost of sales is not affected at all because it's not sold. It's still in the company. Now, when a customer approaches us that he wants to buy one of our laptops, the salesperson said, oh, please bring this laptop. We are selling it. Now, the customer take possession of the laptop, control has occurred again. So you need to pass an item. And what item are you passing? If the customer is paying cash, it means cash is debited to the company's purse and revenue is credited to recognize revenue. Because that item has control has exchanged hand. Right?
Yeah.
But don't forget that that product that you release to the customer came from the warehouse. You have not passed any entry for taking it out of the warehouse. So when you bought, the warehouse goods increase. But now it has gone out, it needs to decrease. So what you do in that point is to credit the warehouse, which is inventory, and debit cost of sales. So that the revenue you recognize from the customer and the cost of the product, they are matched and get gross profit. So this is what play out where escape. Because if I don't explain this, you won't get the understanding I need you to get. So inventory is debited at the point of purchases, and let's say supplier.
As it has not been paid.
Yeah, or cash. So at the point of buying, right?
Yeah.
Then at the point of selling, what we'll be doing is to debit either cash or debtors, right? Or receivables, as the name can be. Then you credit revenue, right? But at the same time, this is for the selling price. But for the cost price of the products, you need to move it out from that warehouse, you know? So it's already in inventory. So it now needs to go to cost of sales, and you credit inventory. So that the inventory goods reduce by what we took out from it. So at every point that goods is sold, these four ledger must be passed.
To represent the selling price and the cost price.
Thank you. So now, If we are now saying, okay, we have sold goods, we sold goods to this person. Let's say, let's attach figure. Let's say this one is 2,000 and 2,000 as well. And the cost of this is 1,000. So that profit will be the difference, right?
Yes, sir.
So okay, so now if the goods you are not selling, there's a clause there that or probably from experience, to when you sell to your distributors or when you sell to your customers, they usually 15% is always returned. So in that case, what you now have here, it will be like if you see this return right of return asset, if you go to the liability side, you see fund liability, refund liability. Where is it now? It's right. Okay, I still need to go down.
Yeah, look at it there. 43.
Okay, good. So this is the other part of that right of return assets. So this refund liability is for you to say, look, oh, I need to cater for a liability of, so here I'll just recognize well, how many percent of return did we say we can allow?
15.
15.
15%.
So 15% of 2,000. So 300. So your refund liability, you need to cater for it. Refund. Yes, just a matter of reclassification. Liabilities is now 300. Why the one that does not does not have any possibility of being returned is 1,700. Right? Now, don't forget, these refund liabilities also requires what is the cost of this item that they can return. You also need to cater for it. Instead of you recognizing it as cost of sales, you will not. Don't forget that when they sold the product, we took it out of inventory. Sorry. We took it out of inventory and take it to cost of sales. So when we bought, we did this. Have I deleted? Okay, I just expanded. So when we bought, inventory increased, but when we are selling, it reduced. Then we took it to cost of sales. Now, it will still reduce for the cost of this item. Let's say the cost of this item is 200. So we'll still take 1,000 of the goods out because it has gone to the customer. But we are going to we are not going to expense it in the income statement by taking it to cost of sales. Rather, we are going to call it right of returned assets. I don't know whether we get what I mean. So let's say it's 200. The cost of it is 200, then maybe this is going to be 800. The one, what did I do? Yeah, correct. So I hope you understand this. So IFRS are just giving it a new name and spell it out, pull it out for fairness. I didn't align it. So let me cut X. I just want to give it a space, paste. Okay. So you see now that I now have refund liability, which is revenue of the money I can't recognize now, just like deferred income. You know. So, and the cost of it is not expensed by taking it to cost of sales, rather it's still as an inventory with us So this right of return asset is just like an inventory. It's just that inventory that has possibility of being returned.
It's part of our inventory.
It's part of, so addition of these
Because
two give
it's
us our total
likely to come back.
to come back.
So instead of recognizing everything that, oh, this one has gone, we still keep it, but we'll now give it a name
Yeah.
in case he comes back.
Comes back.
So when it comes back, it becomes a liability.
Yeah. You know,
But as far as we have moved it out, it's still an asset.
it's still an
Just
asset.
that we
Yeah.
need to keep our eyes on it.
Yeah.
Creating an extra line item to do monitoring and all that. So
Mm.
it's so
So this is how this
So,
layout.
Somebody without accounting background, can they do financial modeling?
Yes, it can. So the funniest thing is that most of the time they do better, but it only takes the serious ones. It only takes the serious one. If the person is not serious, and if the person is not needing it or not part of his work, the person won't be serious. But those of them that are part of their work, oh God of mercy, they will bombard you with questions, and they are accounting questions. So what I do most of the time is to refer them to books, accounting books, to go and read up, and they are always better off.
And because of that seriousness now, they
Because
feel they have so much gap, whereas
Yeah.
the gap is closing, but they will not know. It's maybe when they get into an interaction later, or maybe one interview or at work, they see that, wow, I've gotten better. One person is just there relaxing.
You know. Okay, I hope so. Those are the line items. So you need to actually understand the line items so that I can model them. So for revenue, like I said, I will go and search for it.
You're very right about that line items. Like that CFI course now, FMV, that's what they first started with. That's one of the things I started with. That's
So-
line items. Even in CFA level 1, you know, financial this thing, the financial accounting, financial analysis.
Yeah.
They first started to revenue items. Explain, you read like several pages of revenue items. Now go to expenses. You read up on it. That's tiring.
Yeah. So because you need to, as a modeler, you need to understand every item in that statement, so that you can model. The whole essence is for you to be able to model it well.
Yeah.
Now, look, I mean, a modeler can take that right of return assets and view it as an asset, a tangible asset. Whereas, because I understand it, I know it's a current asset. It's actually an inventory.
And you know the funny thing,
Exactly.
if a model does not know that, he can deceive another blind person. You know, the blind deceiving the blind.
Blind.
Because maybe a startup person that does not understand this thing, he sees your model, he doesn't know that it's a red flag, and he's even saying, man, that guy's good. whereas the guy might be good here, but he has made some errors.
Yeah.
Exactly.
Like, you need to see another person now kind of, why this guy they classify? I'm like,
So that's it. So I'm trying to see the breakdown of revenue, but I've been able to see something segment, that one we looked at the other time. So
first broke down PP, then
so I think that's the only breakdown they have. But I know that Nestle also sell in nearby African countries. So maybe a geographical breakdown of their revenue might.
it's not Nigeria that we're focusing on.
No, they also sell their product, not just in Nigeria, exports.
Yeah.
But it's not that they don't do much of exports of their revenue.
That's so.
Okay, so we can do this breakdown of their revenue.
The food, beverage.
So food and beverage. So I can have it here.
That unallocated. Okay, maybe when you get
No, unallocated is interest now. So I can move this to the last one.
Oh man, this training is a stretch. This trade.
You ask for it, we are giving it to you.
Yes, ah,
You ask for it, we are giving it to you the way you want it, you know. So I'm going to go to 2021 and get the data for 2021, copy that, and so this is what I'm going to actually break down with in my video, and you will see that. So we'll go to cost of sales as well. So I always say, so this should be your guiding principle as well. If your revenue is broken down by the segment, ensure that your cost of sales too is broken down by that segment. Yeah. So let your revenue and cost of sales actually be related, you know, in their line item, you know, so that you can actually do a segment gross profits, food revenue minus food cost of sales, and you can also show that, you know. So I'm going to put this, which I'm going to get the data. Yeah.
Straightforward analysis.
So I'm going to put that as well, then copy this back. So you can see revenue, cost of sales. So this movement is important. You know. This is the main heading. All right. So then marketing. So I'm going to call this we call it SG&A. I don't know whether you've heard of SG&A. Let me write it in full. Selling, general, and admin.
Administrative.
So these two are called that, and we can project them as well. So by SG&A is always projected on revenue, the percentage of revenue. Okay, then we have depreciation. Depreciation, you agree with me that it has a balance sheet relevance, which is PPE. So I'm going to call it PPE. You know. But this is balance sheet assumption, or you call it your, so let me just call it balance sheet assumption for simplicity. Balance sheet assumptions. So I've got PPE and I have depreciation. Now, this PPE, before I can get the depreciation, I will actually need the net book value. Do you agree? I would need the net book value of the assets.
Yeah,
right?
It cannot be lesson for
As a carrying amount.
no.
Are you feeling sleepy?
Yeah,
We're so
I don't
close.
want to take nice care.
We're so
Because
close.
I've noticed I've been taking nice care and I'm now getting tired.
Ah, please don't take it.
Yeah.
Please
That
don't.
escape could just make use.
It has you'll be awake at that point, but later on to have a tiring effect. So that's why a lot of people they just have to be taking escape.
We have reached the saturation point.
Yeah, that's why. Yeah,
That's
that.
why I quickly stop that.
So this one, you agree with me that it has a brother in the equity side, share-based payment reserve. So I'm going to copy this. Don't forget, I'm still going to ensure that I copy this and I ensure that all of them is being forecasted. So let me just do that now. Now that I remember.
Just like the way we did
For that, yeah. And we remove all the totals.
Yeah.
And if they have similarities
But
in the
we have now taken out the we have reclassified depreciation under the income statement as a balance sheet item.
yeah, so I'm going to move it. So up here, I'm going we are going to leave it for only income statement item up here. So now the only thing that remains in the income statement is this equity, and it has commonality in the balance sheet, which is this one. So I'm going to copy this and say, look, I have an heading already for share-based payment reserve. Then finance income and finance cost. This one has a similar finance cost, especially is related to loan.
Yeah.
So my loan, I can see it under non-current loans and borrowings. So I'm going to copy that and give it a heading and say, look, I have loans and borrowings heading where I'm going to get my finance costs. Finance income is will be based on the cash and cash equivalents. So if we have money in the bank, they put an interest rate on it, so we earn an interest from that. So that's that's my cash and cash equivalents. So that's what will bring about the finance costs. What other item? The income tax. Income tax also has a connection with the balance sheet. In fact, two connections: deferred tax and current tax. This one.
Okay.
So it has two connections. Copy. So you can see the way we are actually dissecting, getting those commonalities between income statement and balance sheet. So I'll just call these, let me bring the deferred tax first. Deferred tax, where are you? Deferred tax, this is it. So copy. Okay, so these two things needs to be moved, these three things, the expense,
Put it to the
the
left
ability,
now.
and this one. So I'm going to call this tax assumptions. Then earnings per share. Earnings per share is just a calculation, so we might not need this, so I'm deleting that. Then I come up here. So under this PPE, I'm going to put a space because I have a couple of things there. Property, plant and equipment, and long-term receivables. So I'm going to give this, maybe I call this tangible assets. Intangible assets. Then this is the long, that will be part of receivables. So let me get them together. So this is gone. So I need to get inventories. These are my inventories. Let me take inventories. Okay. All. Take all and come here, paste. And I will call this, okay. I can still come up here. So all this stuff, I'll put them up. And I can call this working capital. Okay, so all this stuff are gone. In fact, let me delete the line. This is also gone. Then I've got issue share capital. I think I have a share-based payment here. He's waiting for video because he knows that video will come.
Jamie,
Yeah.
eh?
Yeah.
No, so that video has not like that's my backup.
I know.
But I'm following you now.
Of course, I know in spirit.
No, I was using my left eye to follow you.
Okay,
What is your
so
left eye?
My left eye.
so I've got issue share capital. So all these ones too go up. Maybe somewhere here. Paste. So I can call this equity assumption.
Tax assumption, equity assumption.
Then which one again? This one we've got an assumption for it. Retained earnings. Yes. So let's just keep it at this. We've got an assumption for share-based payment reserve, so I can close this. So it looks this way. Give it a line. Do this as well a line. Yeah. What else? Any other thing down there? Okay, so we've got loans that have been taken care of. Then we'll have deferred tax have been taken care of. So we have these two, lease liability and no, before I talk about lease liability, let me take the current liabilities. So which stops here? So cut and
No, you're going to remove that current tax liabilities.
What?
no, I'm just grouping it first.
Oh, okay.
I'm not
okay,
working on it now. So when I'm working on it, then can decide to. Why did you say I'm going to remove it?
You know, you are going to use to do calculation of
Huh?
this thing.
You have
Should be on
gone
that.
to the future.
No, not you, not you.
That's what I'm
Okay.
saying. You have gone to the future now. You have seen ahead. Because it me that I'm still in the present.
So working capital assumptions. So these ones are let me give a line for these current assets.
Sorry, sir. Let's take that.
Yeah, the assets, the spend.
Okay. Abi, and this one.
Yeah.
So then I copy this. Why didn't you come yesterday?
Me, you mean me?
Yeah.
Okay, I went to Ikoyi yesterday.
Oh, okay. Yeah.
Went to Ikoyi, and when I came back very, 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 very tired and upset. It was easy.
Yeah. It's one of those things. Okay, so I think I've relocated what is needed for assumptions. What else? So that's all. Oh, employee benefit and lease liabilities. So cut. paste. Other assumption. Other assumptions. What's here? Okay, so I've done justice to, what did I press? Undo. Was I not here? I wanted to delete this space in the middle. Okay. So I've been able to do what I need to do to rearrange everything. Okay, so that's the end of the assumption line. So I hope you guys understand what I've done. I just hope you guys understand what I've done. I went to the income statement, brought all the line items, list them, and rearranged them. You can see balance sheet, tangible, all this. I need to get the net book value, the useful life, then to calculate depreciation will be easier. And the property, plant, and equipment, that will go to the balance sheet, all of that. So, the intangible right of use, then working capital, all our current and the current liabilities, then our cash, finance income, we need to get our cash, then what rates are we going to be earning on our cash balance to give us our finance income. And if we trade in other companies' bonds, we'll also earn an income. Then loans that we borrow, we'll pay interest costs. So tax, equity, share-based payment reserve, other assumptions. Okay. Any questions? I think the time is fast spent. I hope all the explanations I did today is.
Yeah, we'll follow up with the video. So,
Thank you.
but I understand everything.